Hey guys, welcome back. In today's video, we are talking about breaking records, the largest margin calls, making settlements faster, and many more in this video. First, we're taking a look at this. Box office, a Minecraft movie strikes gold with record-shattering 157 million US launch, 301 million globally. So this is obviously in reference to the new film, the new Minecraft film that was released, and it's done exceptionally well. If you guys want to take a look at some more stats, the live-action Minecraft movie had the 4th biggest opening ever for a PG movie, higher than Inside Out 2, which went on to earn $1.7 billion. So if you wanted the understanding of how well this movie is going to do and has done, well, here it is. And this is obviously very good news because one of the things we talked about was going into 2025 and going into 2026 as well. What we are going to be seeing is many more high quality films that will come out that will have extremely good revenue. And of course, with these revenue, as we're seeing how AMC is making their management more efficient, we are obviously going to profit from this as well. So if we were to see, of course, Minecraft doing the same as Inside Out 2, and again, just because it had a bigger opening than Inside Out 2 doesn't mean it will definitely do that, but it obviously shows that there's potential. And so if this movie were to do this much or even more, and we have other promising movies later on in this year, then you can expect the box office to do extremely well. And with the box office doing well, you can obviously understand how AMC will be making money. And that's a very key part right now, which is about having the cash flow as a company. The reason why I say that is because of everything that's happening in the market right now. For those of you who aren't living under a rock, you'll understand that the current markets, because of the tariff, is going through extreme turmoil. You can see $2 trillion has been raised from the stock market today. And over the last few days, what we are seeing is just countless amounts of money being lost. And this is pretty much being the headline we've seen since the start of these tariffs that has happened. And this is the image that you will see for the last week and potentially going into this week as well. And so it's obviously crazy amount, is obviously extreme volatile market, and it's showing how most funds are of course losing drastic value. In times like this, you obviously have to understand is that there's two things. Firstly, a company that is still going to have good fundamentals, and or a company that has extreme cash. So what we've just shown you was how much money is being lost, how many companies obviously going red, but you can see breaking, there's only one company that's loaded with cash during this market correction. It's GME, to be exact, 6.2 billion USD. So what you will see is that in the image where we're seeing Google down 1.64, Apple down 5%, Nvidia down 7%, Netflix down 5.38, Palantir 10.94. What we were seeing is that GME was actually up 7.63%. Now, this is important, and it highlights a very, very key factor, which is the importance of having cash in the market. Recently, there's been an image circulating around, which is showing how the top 10 billionaires all lost money except for Warren Buffett, who actually increased his net worth. Now, this is all because of the fact that companies like Berkshire Hathaway and GME is in a time where we are seeing these massive amounts of selling being happening. They have a lot of cash on hand. They will have the ability to be able to buy many distressed assets, distressed stocks that are at a very, very cheap value because of what's happening right now. And so going back to what we've talked about with AMC is that right now, as we're seeing all of these companies being sold off, if we are able to see AMC to firstly have good fundamentals, it will still encourage investors because they understand that it's a safe place to invest. That's the first aspect. The second factor is about understanding, because of the box office doing well, because of how AMC is able to operate now, and that they're able to make even more money as we're seeing the revenue go up with the box office, then that will put them in a place where they also have a healthy cash pile. And so just as we see how GME was able to go up in a time like this because of the fact that they have a large amount of cash, we're going to be seeing AMC do the same as well. Of course, going with what we've talked about in terms of if they're able to make a large amount of cash as well. And so that's why it's very, very important. And with what we have seen is looking like it's very, very promising for this to obviously happen. And so, that's why people are worried right now in terms of the short sellers. And that's why AMC investors are extremely calm and they understand exactly what's happening. You can see here, and this is why shorts these institutions, why everyone is worried, but not AMC investors, because you can see breaking, hedge funds have been hit with largest margin calls since the 2020 COVID crisis. So we obviously understand that S&P, dropped over 30% during the whole COVID crisis. We knew that a lot of hedge funds took massive hits. But now we're seeing the same thing. We're seeing how these hedge funds have been hit. What we also have to understand is that we are not even seeing the end of this right now. We are only going to be looking at an even more volatile market. The S&P hasn't even dropped as much as it did when the whole COVID crisis happened. But yet we're already having this massive effect that's, of course, happening and occurring. And this is a very key factor and a big point to understand, which is about what we've talked about with how these firms who are taking margin calls will be extremely worried because it will be a snowball effect. Right now, we may be seeing some small firms that are taking hits, but that it's going to obviously snowball. But another key point is obviously the largest margin calls, is that these are big. And so this is what we talked about with going to next week. We're still going to be seeing volatility happening. You can also see here, breaking gold has been reportedly being used to meet the largest margin calls since COVID 2020 from hedge funds this week, per Standard Chartered. So we talked about how many hedge funds are being hit with the largest margin calls. What we also know now is that they're using gold as a way of meeting these collaterals. And so it's obviously very, very interesting, especially understanding what is happening. But one thing this is showing right now is the people who didn't have the collateral in the first place are out of the game. They're being hit with the margin calls. The people who are still in this, who are getting margin called, but still have the ability with these collaterals, are also seeing how their liquidity is drying up. And so that's why it's going to be the end of them, because this image is very important to understand. Now, essentially what it is showing collateral posted by type. What we can see is cash collaterals, other collaterals, and securities collaterals. And what we can see was that the securities collateral took a massive percentage in terms of the collaterals that are being used. So we talked about how because stocks like Nvidia, stocks like potentially Netflix are used as a way of collaterals to suppress AMC. And so that's why they needed to keep these positions in Nvidia, in Netflix. But because what we are seeing right now with these margin calls happening, they are no longer able to actually keep these positions. But then again, it goes back to what we talked about here. That's why they're using gold to make sure they can keep the Netflix position alive, to keep the Nvidia positions alive, so that they can keep the AMC positions alive. And this is what we talked about, is about understanding the whole chain of how they're using these collaterals to meet the margins to ultimately, for one purpose, suppress AMC and GME. But what we are going to be seeing is how it's all going to run out. We're going to be seeing these illiquidity problems, and they are obviously going to fail, and is why we're going to be seeing the squeeze. You can also see this particular headline: hedge funds are facing Lehman-style margin calls as a market crash triggered by President Donald Trump's tariff raised fears of a looming Black Monday. Now, one of the hypotheses is that what if their real aim is to trigger margin calls to get rid of bad actors on the financial market? Time will tell. In the meantime, AMC holders just might experience a pleasant surprise. And that's obviously talking about what we said with, this whole box office doing well, with how AMC investors aren't worried as we're seeing tech stocks getting sold off. But in order to go further into this, and it's talking about how, what if their real aim is to trigger margin calls? Because one thing we've understood was that Donald Trump does not like Ken Griffin. Now, one thing we've also seen recently is Citadel has closed many of their highly leveraged positions. And this was before the tariff stuff even happened, right? They experienced losses in February. They experienced losses in March. They were said to that they have closed down highly leveraged positions. And what we know was that Citadel are, of course, in these positions where they're extremely over leveraged. And this is what's happening right now. These very tariffs are hurting and damaging the firms who are extremely over leveraged, hence why the margin calls are happening. And so if we do understand about the relationship between Trump and Ken Griffin, and these things are hurting, firms like Citadel, then what this hypothesis here obviously could be true. Now, again, a hypothesis is just a hypothesis. I'm curious to hear what you guys think about it. Comment down below. But furthermore, you can see digital assets are coming and T+0 are coming. This will make settlement and clearing faster, which is bad news for over-the-counter market makers who make it sure to provide liquidity. And so on top of what's already happening right now, on top of the illiquidity issue that's happening, you can see how there's more struggles for liquidity. Now that itself will obviously prove useful for the apes, and these institutions will obviously be in turmoil. But yeah guys, thanks for watching. I'll catch you guys next time.